In your view, does the European Central Bank have the firepower still, whatever it is, to re-stimulate the euro area economy and your own economy, which your own central bank sees starting to slow down?
Well, thank you and good afternoon. I think that the European Central Bank has proven in the past that it has enough firepower to withhold the euro area. But as the governor, Mario Draghi, just stated, he made also the point that it should be also for governments to push the stimulus and internal demand. Monetary policy has got its limits. But I think that the push that the ECB may be doing is going to be important in supporting the economy in these times of uncertainty.
As we fold in slowing growth and the ECB into the bond and interest rate dynamics, I almost fell off my chair when I took a look at your 10-year, which is below 1%. We talk here in the U.S., a big deal closing below 2% on our 10-year. What have you done to sort of decouple yourself from the worries of peripheral Europe and become really, a firehouse for the bond yields?
I think that the sort of fiscal discipline that the country has shown in the last 5 years or so has been very significant. We've been consistently delivering on a budget which is demanding, which as we balanced the budget this year. So that has consistently shown the markets that we are committed to the reduction of the government debt. And that has been then impacted by the fact that markets are recognizing that. And we are completely decoupling from economies such as other Southern European economies in terms of the yields.
How important is that decoupling, and how fast does it need to happen when we're not right now at a stage where rates are historically low across, at least in the major economies, and presumably going a lot lower?
Well, you may be reminded that Portugal had a bailout program just less than 10 years ago, and we had to make a significant effort. There's still a lot of debt in the economy. So we believe that we took the advantage of these years of expansion to really make an effort to balance the budget and reduce the debt. And we are committed to continue doing so going forward. We think that it is time for Europe to, as a whole, and the Western economies to push for stimulus and support the demand. But we believe that it's not for the peripheral indebted economies in the South to do that part of the effort. So we are committed to delivering on the budget.
Sometime like in the last year or two, I started noticing that like half the people I follow on Instagram were visiting Portugal. Your country has had a huge tourism boom, but we also know that there could be, there's no guarantee that lasts. We just got news today, Iceland may be slipping into its first recession thanks to slowing tourism. And of course, there's Brexit, which is a major source of tourists to Portugal. Yeah. How concerned are you about the sustainability of what's become an important driver of your growth?
Well, we believe that what the effort and the strategy for tourism in the past 3 years has been to diversify the destinations within Portugal and to expand offer around the year. So we've the regions which have most increased are outside the traditional Lisbon and the South regions, and we are delivering on that. We have made a significant effort in connecting directly the country to other areas. The U.S., we have increased significantly direct flights from the U.S., which has meant that just last year 1 million American visitors were in Portugal. This is more or less the double of what it was 3 years ago. Wow. So we think that this is an untapped market, and there are others such as China, such as Korea, and Brazil, which can provide a sustained growth there. And I think that the country is a small country, but very diverse in terms of landscape, excellent climate, third more peaceful country in the world. And so it's a preferred choice for visitors. We discovered the world 500 years ago. Now the world is discovering Portugal.
You were talking earlier about balancing your budget, and there's, of course, as we know, two additions to that equation, raising the revenue and reducing expenses. Within tourism, we know revenue's been increasing. What have you done on the expense side to reduce expenses to make sure that budget is balanced?
Well, what we are doing is that we are making sure that government expenditure is below the growth of nominal GDP growth.
Okay.
And as a result, the level of expenditure as a percentage of GDP has been reducing. So it's difficult to be managing this, but whilst at the same time turning the page on austerity and making sure that people didn't feel the contraction on their income tax or on the salaries and pensions which are being paid by government, we didn't grow the expenditure as much as GDP demand, and that has been the effort. And then being very strong on the growth in employment has helped the income side and the reduction of debt. The most significant contribution has been the reduction of interest on public debt. Because just the fact that you are now going down on that, this has meant significant savings on interest.